All right, I think we'll get the show on the road. Good morning, everybody, and welcome to this virtual conversation on the topic of the Paycheck Protection Program and loan forgiveness, which is clearly an important topic on the minds of many of us. My name's Tom Pico, and I'm the president of the Chamber, and we are glad to have you with us this morning. So before we get to our presenter, a couple of acknowledgements. First, I want to acknowledge our premium members, which are members of the Chamber that make an additional investment with us in exchange for additional marketing opportunities. And those premium members are Machias Savings Bank, LCI, Ballou and Associates, and Eaton Peabody. And we also want to thank Eaton Peabody, of course, for partnering with our Chamber to sponsor this session today, which is part of our Eaton Peabody Legal Series. Eaton Peabody is a valued partner for our Chamber and many other chambers across the state, and we greatly appreciate their support. Finally, an acknowledgement that we're recording this session today and we'll be making it available publicly on our YouTube channel later for viewing by those who are unable to join us live, but we wanted to make you aware of that. So I'd like to now introduce our presenter, who's Jack Bjorn. Jack is an associate in Eaton Peabody's Employee Benefits Practice Group based in Portland. Prior to joining Eaton Peabody, Jack earned his JD from the University of New Hampshire School of Law. As a black bear, I won't hold that against you, Jack. While in law school, Jack served as a judicial intern for the Honorable Gary Hicks of the New Hampshire Supreme Court, as well as a judicial intern for the Honorable Paul Barbadoro of the U.S. District Court for the District of New Hampshire. Jack will have a few minutes of prepared presentation, and then we'll get into your questions. If you have a question, please just shoot me either privately, preferably in the chat, just the word question, and I'll call on you in order when we get to that. And then, or if you're a little camera shy, you can actually just type your question in the chat and I'll ask it for you, but we'll let Jack finish his presentation for a few minutes and then go to questions. And we are looking to keep this session today to an hour, so we'll wrap up by 10 o'clock. So thank you all for being here, and Jack, the floor is yours.
Thank you, Tom, and thank you everybody for joining us this morning. It's a pleasure to be here on behalf of Eaton Peabody. The PPP and the CARES Act have kind of become my practice area for the last 6 months, and I'm sure if we have another round of stimulus package, that will become my focus as well. And please, anybody, I will try to pay attention to the chat as we go along. If you have any questions, feel free to speak up or leave me a note in the chat, and we'll try to address those as we go. So this morning, just to give you a little preview, I'm going to try and do just a very brief background on the PPP program itself. At this point, the application process is closed, so I'm not going to deal so much with the application as the forgiveness process. From there, I'm going to take a quick look at the HEALS Act, which is relevant to the forgiveness piece, even though the HEALS Act has not passed yet, or any version of it. And then from there, I'll get into the two forgiveness applications and then a brief summary of the financial support coming from the state of Maine. So jumping right in, at this point in time, there have been over 5.2 million PPP applications approved. Again, the application process has closed, but as I'll get to in a minute, there could possibly be another round coming with a new stimulus package. In total, the loans approved for the PPP have amounted to $525 billion, and the average loan size is roughly $100,000, with 5,500 participating lenders across the United States. Just as a little bit of background into the PPP program, to kind of remember everything, the loans themselves are at an interest rate of 1% if not forgiven. Loans before June 5th have a 2-year maturity. Loans after June 5th have a 5-year maturity, and loan payments will be deferred for 6 months. There were no collateral or personal guarantees necessary. There were no fees. And importantly, there's no prepayment penalty, which will certainly factor into the forgiveness piece as well. With new developments in the Flexibility PPP Act, there is an alternative payroll covered period to align with the borrower's regular payroll cycle. So long as payments were made on or before the next payment date, those payments can be forgiven as well. Instead of the 8-week period that the PPP initially started with for a covered period, there's now also a 24-week covered period. So if you had a loan when this all started, you can elect and work with your lender to get a 24-week covered period as well. You have 10 months to submit your application following completion of the covered period, and are not required to make payments until the forgiveness amount is remitted to the lender by the SBA. Interest does accrue during that time, but again, there's no prepayment penalty, and if you've used the loans based on what is stated in the Act, that all of that can be forgiven. So jumping now to the HEALS Act, and something I want to cover, because this has a direct stake in forgiveness applications from now moving forward. As you may know, the HEALS Act is the Senate version of the next round of a stimulus package. The House had previously passed the HEROES Act, which has some similarity, but was a lot larger in size than the HEALS Act. That being said, both include PPP funds and another round of PPP, as well as more guidance on the forgiveness of the PPP loans to date. So the HEALS Act consists of 13 separate acts, and the one that we're focusing on is the Continuing Small Business Recovery and Paycheck Protection Program Act. That act allows for additional uses for PPP funds to cover operations expenditures, property damage costs, supplier costs, and worker protection costs. So what that means is that any expenses that you or your business might be using to install plexiglass or spend on masks or hand sanitizer or things around your facility that help allow your business to continue in a safe manner, those would all be eligible expenses for the PPP program. Additionally, there's a lender safe harbor that if the lender acts in good faith, the lender shall not be subject to penalties relating to the origination or forgiveness. That mainly applies to banks, but is an important factor in all of this as well. Most importantly, for purposes of the PPP forgiveness aspect, is that the HEALS Act would include a simplified application process for loans under $150,000, which would just require you to sign and submit to the lender an attestation that the recipient made a good faith effort to comply with the requirements of the SBA. You would need to retain your records for 3 years that would otherwise prove compliance with the PPP requirements. And you can complete and submit any form relating to the demographic info that the SBA would be looking for as well. So basically, what that is saying is that instead of filling out a full application with all of the other required information, including your bank statements and checks and all of your bills for power, water, electricity, that kind of thing, you would just have to submit a signed attestation saying that you used the loan properly. And that will save time and money for many businesses throughout the state. Again, as the average loan was for $100,000, and this would cover any loan under $150,000. For loans between $150,000 and up to $2 million, those recipients would not be required to submit the supporting documentation described in paragraph 1 and 2 of the Act. But again, those recipients shall retain all relevant supporting documentation for 3 years to allow for the SBA, if it chooses to review that application. Also a part of the HEALS Act, group insurance payments are included in payroll costs. That makes the benefits more specific. And there would be a second round of PPP funds available for many businesses as well. To be eligible for that second round, businesses that were up to 300 people that had gross receipts in the first or second quarter that are not less than 50% less than the same quarter in 2019, or if not in business during that time, that are less than 50% of the amount of gross receipts in the third or fourth quarter, those businesses would be eligible for another round of PPP loan funds. The same calculation method, 2.5 times payroll costs or a $2 million max, or for seasonal employers, which apply to much of our state, 2.5 times the 12-week period from February 15th, 2019, or March 1st to June 2019, or a 12-week period from May 2019 to September 15th, 2019. I know this is a lot to soak in, so just kind of bear with me as we're going through this, because I'm sure that it will benefit many businesses in the state should the act pass, and I believe that some version of it will someday in the future. For new entities that did not exist in the 1-year period before February 15th, the max amount is the lesser of a quotient determined by the SBA that includes the total amount of monthly payments for payroll and costs, other eligible costs incurred, times 2.5, or again, a $2 million max. Importantly, for our purposes, entities that employ not more than 300 employees in a single location would be eligible. And again, those assigned the NAICS code 72 would be eligible for multiple locations, but again, up to a $2 million max. Again, the forgiveness amount would be the sum of payroll costs, interest on mortgage, covered operations, covered property damage, rent, utilities, supplier costs, worker protection expenditures. That again expands the focus of the PPP program and would allow businesses to supplement whatever costs they have using the PPP loans. The HEALS Act would also set aside $25 billion for businesses with 10 or fewer employees, and $10 billion for community financial institutions, small insured depository institutions, and credit unions and farm credit system institutions. One big benefit to the HEALS Act is that the chamber organizations or 501c6 organizations would also be eligible. And there would be a separate calculation for farmers and ranchers. Loan proceeds may not be used for lobbying activities, and bankruptcy debtors may obtain a loan, but may not receive a loan if there is a conflict of interest. That substantially changes the last version that was included in the CARES Act to allow businesses that are going through financial hardship or going through bankruptcy to apply, even though they weren't allowed to the first time. So that is kind of the preface to the application process as it stands right now, with the main focus being that since you have 10 months to apply after the end of your covered period, you can still wait right now if you are in a position to have this easier form of application process that wouldn't allow you to spend time and resources collecting all of the information that you would need to submit an application as it would exist right now. So with that being said, there currently are two different application forms, the normal main application form and the EZ application form. Both of these forms have undergone a number of changes since this all started, and the SBA continues to update them and answer questions and adjust them as more and more questions come up from applicants and recipients of PPP loans. So the normal application would require a lot more information, and employees at the time of forgiveness would be included even if that number is 0. And so this was a specific question that I asked the SBA because some businesses might have used their PPP funds, and then at the end of their covered period or sometime after expending all of those funds, were forced to lay off individuals and perhaps close permanently or temporarily. And if you are applying for your loan and you have 0 employees at the time that you're applying for your loan, you should include that. However, I will say that you might want to leave a note that you had employees for the entire period that you were using the loan. And that way it becomes more clear to the SBA and to the lender that you should be receiving forgiveness for the loan and that you are not otherwise subject to the decrease in forgiveness because you have decreased your FTE or full-time employees. So here, with a normal application, you would need a schedule of every employee, their salary, and the average full-time employees. You would determine this if any pay was reduced by more than 25%, or if there was any reduction in the number of employees by more than 25%. And again, both of those would decrease the amount of eligible forgiveness. There are a couple of exceptions. For full-time employees, if you had made a good faith written offer to rehire and the borrower was unable to hire similarly qualified employees for unfilled positions on or before December 31st of this year, or you had a written offer to restore any reduction in hours and the employee rejected that offer, or you had employees that were fired for cause, voluntarily resigned, or voluntarily requested reduction in hours. All of those, if any of those took place, you would still be eligible for full forgiveness so long as that was documented. There are also two full-time employee safe harbors. One is that if the borrower is able to document that it was unable to operate between February 15th and the end of the covered period at the same level as before February 15th due to health and safety compliance requirements from the DHHS, OSHA, and the CDC. So for those purposes, think restaurants that might not be able to have people in the restaurant because of social distancing requirements or have fewer tables within that restaurant. That would factor into this forgiveness piece as well. And those employees, if you had to reduce your business during that time, the forgiveness wouldn't otherwise be affected. The other is that if the borrower reduced its FTE levels in the period from February 15th and entering April 26th, and the borrower restored its levels of employees by not later than December 31st of this year, then that wouldn't affect your forgiveness as well. So again, there's a lot of documentation required in this main application. That includes verifying all cash compensation and non-cash benefits, including bank statements, tax forms, payment receipts, canceled checks, etc. Documentation showing your employee levels and documentation showing non-payroll expenses. Again, including bills and any pay stubs or anything like that. You also must maintain, but not submit, a lot of documentation as well, including documentation of each individual employee in Schedule A and supporting documentation of annualized salary of $100,000 or less, as well as job offers and refusal, documentation of your inability to operate at the same levels, documentation regarding these safe harbors. There's a lot going on in this main application. That being said, there's also the EZ form. So in order to be eligible for the EZ form, you have to meet one of three categories. And I'm just gonna read straight from those three categories just for clarity purposes. One category is that the borrower is self-employed, an independent contractor, or a sole proprietor who had no employees at the time of the loan application and did not include any employee salaries in the payroll computation. Number two would be that the borrower did not reduce salary or hourly wages of any employee by more than 25% during the covered period or alternative covered period, and did not reduce the number of employees or the average paid hours of employees between January 1 and the end of the covered period. Number three, and this one's a mouthful, the borrower did not reduce annual salary or hourly wages of any employee by more than 25% during the covered period or alternative covered period compared to the period between January 1 and March 31st, and the borrower is unable to operate, again, due to DHHS, CDC, or OSHA standards on social distancing and public health measures. So if you could fit into any one of those categories, you would be eligible for an EZ application form. And the EZ application form is much shorter. So regardless of what happens with the HEALS Act or any version thereof, the EZ form would be the go-to form if you meet any one of those categories, because it requires you to do a lot less work. As a reminder, the covered period is either that 24-week period beginning on loan disbursement, or if you received your loan before June 5th, the borrower may elect to use that 8-week covered period. And you can apply at any time thereafter. And again, in no event may the covered period extend beyond January 1st or December 31st of this year.
Jack, I had somebody ask a question that may be
Yep.
appropriate right here, which is, if your employee count dropped because your employees just decided not to work, but you didn't have any layoffs, would you still be able to use the easy form?
I believe so. And again, this would come back to the safe harbors where if you were able to document that those employees refused to return to work based on a written offer that you had given them, then you would not have any trouble receiving full loan forgiveness, and you could apply using this easy application form.
Great, thanks.
You're welcome. And again, the list of documentation here is a lot shorter. You still need to have your bank statements, tax forms, receipts, canceled checks, that kind of thing, but you would not have to have a employee by employee breakdown of every amount, the hours worked, the salary paid that you would need in Schedule A of the normal form. For either application, just to give you a sense of the timeline, the lender must process the application within 60 days and the SBA must process within 90 days. Once the SBA makes its decision, the borrower and the borrower only, not the lender, can appeal the decision within 30 days if you or your business believes that you are entitled to more forgiveness than, say, the SBA is providing or says that you are. The lender must then let the SBA know of that appeal within 5 days. So importantly, at this point in time, my recommendation for most businesses, all businesses rather, would be to hold off and wait to see if there is another stimulus package coming and what that stimulus package includes in terms of PPP forgiveness and new PPP funds. If the new HEALS Act or HEROES Act or whatever the act ends up being includes a much easier application process, including a standard across the board, you're forgiven if you just attest to the fact that you used your loan properly, that will be immensely beneficial to businesses across the state, especially since most businesses will have had loans that were $150,000 or less. One other thing that I wanted to mention, just because we're kind of in the middle of it as well, again, even though the application process has closed, is that Maine has also introduced the Maine Economic Recovery Grant Program. That program used funds from the CARES Act, Coronavirus Relief Fund, had relief for small businesses and nonprofits, and includes a grant of up to $100,000 based on need, which included loss in revenues minus expenses since March 1st due to COVID impacts, and was not on a first come, first served basis. Again, the application closed for that grant program on September 9th, but the grants will be awarded sometime in the next few weeks, as expected in early October. One reason that I bring this up is because the state of Maine has also said that it is likely that there will be another round of this economic recovery grant program, as the state has additional funds left over from those allocated to it under the CARES Act. So just to give you kind of a heads up going forward, if you hadn't already applied for this program and there is another round, to be eligible, you must demonstrate that you expect a 20% loss of revenue for 2020. You had significant operations in Maine, which include your headquarters here or more than 50% of your employees here. You have 50 or fewer employees or contract employees. You were in operation for a year before August 1st of this year, and not currently in bankruptcy. And you are in good standing with all Maine payroll, sales, and state income taxes through July 31st of this year, as well as in good standing with the Maine Department of Labor. Those funds could be used for payroll costs and expenses, rent and mortgage interest payments, utilities, necessary operating expenses, and purchasing PPP or PPE and business equipment, much like the PPP funds as well. Again, those can only be used for operations within the state and cannot be for depreciation expenses, entertainment, lobbying, personal use, or paying fines or penalties or damages or other settlement payments. Maine at this point has committed $807 million of its $1.25 billion in CARES Act money, which is why I expect that there will be another round of grant money at some point in the future, which would provide additional funds to small businesses as well. So I know that was a lot to soak in, and the PPP program has been complicated and ever-changing. But at this point, if any of you have any questions, please feel free to speak up or leave a message in the chat, and I will be happy to answer those.
Great. Yeah, I'll try to moderate this. If you have a question, just either put in the chat question and I'll call on you, or you can type it in and we'll address it. Just on the state program, I think the state recently expanded that again to those who employ 250 or less now. So just in the last couple of weeks. So there has been an expansion of that program. So what do we have for questions out there specifically while we have Jack for the next half hour or so here? Not often that you get a free shot at an attorney here, right? So
exactly. And just as a bit of levity, while any of you are thinking up any of your questions, I did read this morning that the SBA has discovered that there was a fraudulent loan further south of $1.7 million, in which that loan recipient used all Game of Thrones names in their application. And so that person will be subject to lots of fines and potentially jail time going forward. But just in case there are any Game of Thrones fans out there, know going forward that you cannot use White Walker or Arya Stark on your application process for PPP round 2.
Good to know.
As this recipient did, yeah.
Somebody had asked about the deadline for forgiveness applications. What is the deadline for?
Yeah, so again, the deadline is for 10 months after your covered period. So that could either be the 8-week period if you had one of the original 8-week covered periods, or the 24-week period if you had a loan after June 5th. You can apply before the end of that 24-week period if you have expended all of your loan funds. But at this point, my recommendation would be to wait because you might have a much easier time applying a month or 2 months from now if there is the HEROES Act or the HEALS Act passes in some form. Again, both of those have included new PPP funds and new PPP guidance, which would be beneficial to small businesses across the country.
Can you talk a little bit about applying for multiple sources? Like if somebody has already applied and received PPP funds and then there's another round, will they be able to apply again? And if does getting PPP prevent you from accessing the state program? So those kinds of things.
So first and foremost, the PPP program does not prevent you from applying for the state program. And in terms of your other question, in terms of applying for the next round, with the current PPP program as part of the CARES Act, you could only apply once. There's an exception for businesses that had applied early before some of the guidance that allowed a greater amount of loan funds to be accessed. But as it looks going forward, it does appear that Congress hopes to have people apply for forgiveness before receiving a second round of PPP funds, and then based on their eligibility for forgiveness, they would be able to access additional PPP funds. I think that that's still up in the air. I think that based on the most recent versions of kind of standard 150,000 or less, easy application with no real forms or substance to it, that it might end up being that you can just apply for another round, especially for those that are applying for smaller amounts, without having to apply for forgiveness first and then apply for additional funds. But again, that is kind of up in the air, as a lot of this whole process has been. Things have been slower more recently, but I don't know if many of you remember when the CARES Act passed, there were changes almost daily with what the SBA was coming out with and what the Treasury Department was coming out with in terms of further guidance on how these funds could be used and what the application process would look like.
Obviously, this is all new in terms of the forgiveness, so we don't really know, but it occurs to me that if people have to apply for forgiveness potentially before they apply for another infusion of PPP funds, do you anticipate the mechanism is going to work quickly enough for that to actually happen in time for people to apply?
I hope so.
Yeah.
I will say that just kind of reading the news this morning that there have been businesses expressing frustrations with the turnaround for these forgiveness applications, and knowing that things might change in the future with an additional act that would provide additional funds. My hope certainly would be that Congress would be understanding and sympathetic to those concerns, especially if there is another 2-month deadline maybe to apply for the loans themselves. If that was the case, I would certainly hope that people would be able to apply for another round without having to apply for forgiveness first, because that certainly would shorten that deadline.
For sure. So I do have another question from a participant here. Is the forgiveness application submitted just to your lender or to the lender and the SBA?
So the application itself is just to your lender, and the lender will submit the information that you've provided to the SBA for the SBA to eventually remit funds to the lender that they have provided to you and provide a determination on forgiveness. One important piece that I mentioned early on this morning was that as part of the PPP program, there's no prepayment penalty. There's a lot of P's going around here, if you couldn't tell. But with the no prepayment penalty, that means even if you've applied for a loan and say you had a loan of $100,000 and only $90,000 of it was forgiven, the remaining $10,000 could be prepaid with no penalty. So there would be a 1% interest on that for the time that you had the loan, but you can pay that money back immediately to the lender without accruing any additional interest before the standard 2 to 5 years of the maturity of the loan. That is certainly helpful, especially if you haven't used all of the PPP funds at this point. The 24-week covered period was allowed so that people could have additional time to use all of their funds. But if you have any additional funds at the end, you could prepay that with no penalty at all, and hopefully have the rest forgiven.
Great. Another question, which is closely related to what you were talking about, I think. If the business waits for the next round to be approved by the federal government, you'd pay interest on the PPP loan while you're waiting, but then would that interest get credited back, or is that gone?
So provided that you, kind of two answers to that question, provided that you are 100% eligible for forgiveness, the interest will be forgiven as well. If you have waited and you are not eligible for 100% forgiveness, yes, that interest will accrue, but again, it's only at 1%. So any remaining amount that's not forgivable will accrue interest at 1%, which in most cases will not be a substantial amount of money. It is interest, so it is in business's best interest to prepay that as soon as possible. But if the the next act allows for an easier application process, then it might be worthwhile to those businesses to wait and see what guidance comes forth.
Sure. Okay. Another question, could you clarify time periods for lender and SBA to review loan forgiveness applications? 60 days for the lender and then add another 90 days for SBA. So a business could wait 150 days for a decision. Is that true?
Yep, that is true. I think the hope is that these would be processed much faster than that. But you would not be responsible to make any payments on any amount that's not forgivable until after the SBA has made its final decision. But it could be up to 150 days after the time that you submit your application to your lender.
Mm-hmm.
And again, just in terms of deadlines, if you disagree with the SBA's determination, you would have 30 days to appeal that decision. And right now it's unclear what that appeal process will look like or the timing of that appeal process beyond just appealing. But that would allow for some additional time and an additional avenue to dispute the forgiveness application if you end up needing to.
Right. I've had a couple people ask if there's any sort of a summary of your opening presentation or maybe a sort of a one-page cheat sheet for people that would summarize some of the key points of this that we might be able to share with folks on the Zoom. Is that something you have available? So.
Yes, after this presentation, I can share that with you.
Just,
and you
just email it to me. And,
members. Yep.
Yeah, I can get it out to everybody who's registered for this and others who request it too. That would be great. So
yeah, I'd be more than happy to. I can polish it up a little bit and send it out so that it's an easy, reviewable form for anybody to look at.
That's great. That's great. So, all right. Any other questions out there? I have gone through the ones that have been sent to me. We certainly can wrap it up if we've answered everybody's questions, but anyway, I thank you for the cheat sheet coming through. So that'll be, that's good. I think that's a popular request. So, all right. Well, I think we have gone through the questions, and this has been a really helpful presentation, Jack. I really appreciate it. And if you work out of the Eaton Peabody's Portland office, if that's right, if people want to follow up with you. But again, we have recorded this session and we'll make it available if you want to watch it again. And for everybody who's registered, we will email around Jack's notes on this session. Do you have any, one last thing, I see a note about the EIDL loans. Do you have any things to share about those before we wrap up?
So as it relates to the PPP program, the EIDL loans, and specifically the grant that people received as a part of those loans would be factored into the PPP forgiveness. So if you received a grant as part of an EIDL loan, then your forgiveness of the PPP loan, once you applied for the PPP loan, would be reduced by that amount. And again, as you said, Tom, if anybody has any questions, please feel free to reach out to me after this presentation too, and I'll be happy to help answer any that you may have.
Great, super. Jack Bjorn from Eaton Peabody, thank you for being with us today. And we will, as I said, share the notes from your presentation and this video with our members. So thanks again. Have a great day, everybody.
Thank you.
Thank you, everybody.